Do you love Formula One and have always wondered how to put some money on the line? Because of the controversial former Formula One tycoon Bernie Ecclestone's success in luring lucrative TV viewing contracts and high-profile sponsorship for the sport, it is, after all, a multi-billion-dollar industry. It's not possible to invest directly in Formula One teams, of course, and it's worth remembering that racing is a highly risky investment. However, purchasing shares in organizations linked to Formula One allows one to engage in indirect sports trading. Keep watching this video to learn more on how you can invest in Formula One stocks. Stock suggestion number 1, Liberty Media, F1 in turnaround mode. Liberty Media owns Formula One, SiriusXM, the radio station known for its outspoken host Howard Stern, and the Atlanta Braves baseball team through a convoluted network of businesses. Due to the global COVID lockdowns over the past few years, Formula One has struggled. From $2.15 billion in the same quarter last year to $2.25 billion in the second quarter, revenues increased by 4%, while net income came in at $292 million. The second quarter of 2021 saw Formula One revenue of $501 million increase by 49% to $744 million. Following the cancellations due to COVID lockdowns, the company claims that Formula One has seen record fan attendance. The Formula One 2022 season is still breaking records with thrilling racing action and unpredictable results. Stefano Domenicali, president and CEO of Formula One, said, "We're drawing fans both physically and online." The shares have staged a comeback after a lackluster start to the year, rising 15% this year to $56.57. They might nevertheless still have some advantages. Morgan Stanley broker analysts predict that the shares could rise to $72. Stock suggestion number 2, Ricardo, Motorsports and the Environment. Since McLaren is a privately held company, direct trading is not permitted. Nevertheless, UK-sided engineering company Ricardo creates transmission services and parts for the McLaren team. The company employs a number of former Formula One engineers and has a wealth of motorsport knowledge at its specialized facility in Leamington Spa. Ricardo, however, is not a one-trick pony and offers its engineering and consulting services in a variety of industries, including rail, trucks, the government, the military, the environment, and many others. Management claims that there is an increasing demand for its climate support services as a result of the adoption of green policies by numerous governments around the world. Additionally, Ricardo's A&I division is stepping up its research into electric vehicles and alternative fuels, so it should gain from the movement toward more environmentally friendly transportation. At the February 2022 half-year results, order intake increased by 16% to £210 million. The company recovered from losses of £2.1 million the previous year to report pre-tax profits of £3.7 million, while revenues increased 13% to £185.5 million. Additionally, net debt decreased from £50.4 million to £39 million. The shares have increased 8% this year to 414p, which is over €1 over their 5-year low of 306p, which was reached in August 2020. They're still far below their 5-year highs of 1075p, which were reached in May of 2018. Stock suggestion number 3, Ferrari, the resilience of luxury brands. Ferrari, with headquarters in Italy, was founded in 1939 by the illustrious Enzo Ferrari from the Alfa Romeo racing team and is now valued at €40 billion. Despite the fact that investors cannot directly invest in the Ferrari Formula One team, the renowned automaker is publicly traded on the Milan and New York stock exchanges. Ferrari reported record net sales of €1.2 billion in the first quarter of 2022, up 17.3% from the same period in 2021. EBITDA increased by 12.5% to €423 million from the prior year. Ferrari CEO Benedetto Vigna reports that the company is currently experiencing strong net order intake, which has persisted throughout the first 3 months of 2022 and is fueled by early sales of the Daytona SB3. The 2023 market's new limited edition Daytona SB3 model, powered by a V12 engine, is a tribute to the team's victory in the 1967 24-hour Daytona race. The 812 Competizione A and the vehicle, which sells for $2.3 million per unit, helped Ferrari double its free cash flow for the quarter to €300 million. The majority of our models are sold out, and the order book currently extends well into 2023, Vinia informed investors. Even though the geopolitical environment in 2022 has been marked by a number of uncertainties, I remain optimistic about the company's future prospects. Sales to Europe, the Middle East, and Africa actually increased by 19.5%, while shipments to China, Hong Kong, and Taiwan increased by a robust 47% despite a 12.8% decline in US sales. Due to a better Formula One ranking in 2021, sponsorship and commercial revenues also increased by 19.6% to €109 million. Luxury brands aren't always as vulnerable as mid-range brands because their customers may prove more resilient to macroeconomic fluctuations, even though the impending global recession may hurt the company's shares. However, fewer bankers might be able to buy a new sports car with their annual bonus the following year, and COVID lockdowns in Asia might also hurt sales. In addition, Ferrari appears to be better prepared for tough times, with its net debt having decreased to €136 million from €297 million the year before. The shares are currently trading at $211, which is below their 5-year high of $278.8 reached in November 2021 and could provide a good entry point for buyers. Liberty Media, led by U.S. billionaire John Malone and a stakeholder in the U.S. radio station SiriusXM, acquired F1's parent company Delta Topco for $8 billion in 2017. Liberty Media is a publicly traded company in the United States. Similar to many other industries, buying so-called picks and shovel businesses associated with the industry rather than the major players themselves can also be a wise decision. Always keep in mind that following something blindly because you like it is never a good idea. Many football fans who bought stock in their own teams have been let down. Make sure the businesses you invest in are sound investments on their own before doing so.